And we're live. We're back with This Week in Coverager. Thanks everyone for joining in. This has been a pretty big success for us. I think it's a really nice format for folks who can just jump in and hear some of the top stories and listen to Avi, Shefi, and I debate what the importance of them. So we, as usual, kick it right off over to Avi for this week's one of this week's top stories. Avi, Shefi, good morning.
Good morning.
Everybody.
Hi. What's going on?
We'll start with today's big news item, not something we covered in a big way, but it was out there. Select Quote became a public company, I believe, yesterday. Congratulations. The stock is doing really well the first day of trading. So we kind of took a little look at their S1 filing. And if anyone thought that they cracked the code or were actually doing well selling to modern consumers, think again. Majority of customers, the most popular product Select Quote sells is senior health insurance. I believe that represents over 50% of their revenue. And it's interesting because it makes you feel, and this is a debate, of course, maybe insurtechs are trying to solve a very difficult problem, while companies like Select Quote, Assurance IQ are seeing success targeting an audience that is still nice enough to talk on the phone. And I bet you that there are other segments of auto and home and life. I bet you these are probably older demographics as well. So when they're on the phone with the person selling, the health insurance, hey, let's look at your home insurance, let's look at your auto insurance. And I believe that's where they see most of the success, because again, it's not something that a modern consumer would do, because if they aren't comfortable doing it online or doing it even on the phone with, like-minded individuals, then he will definitely not do it with Select Quote. But congratulations to Select Quote. It's interesting because now this is more of a problem for Prudential and Assurance IQ. That's a serious competitor.
Yeah.
I think he's being sarcastic, though.
In what way?
No.
You are truly congratulating them. So I think there needs.
Congratulations, the company. Everybody.
You're being sarcastic in Prudential, Shefi? Being a competitor?
I mean on.
Congratulations.
Maybe
No,
not.
I
Genuinely happy for them.
I'm not happy because I'm not getting any money, but I think they had a plan. Obviously, it's not all flowers and sunshine. They have liabilities. It's a very challenging business model. They spend a lot in marketing. But for the company founder, the executives are gonna, make some nice money. And for the business, it's a success, I would say. After 35 years to go public, I think for them, they're happy.
Yeah.
I
have two issues.
How long? How long have they been in business?
35 years, since I believe 1985.
So well before the modern day insurtechs.
I think they like to say that they were one of the first, if not the first, to go virtual.
D2C,
yeah. The cell phone is a big part of their selling proposition. And, the first takeaway for me is when you go to the press release, these companies talk about consumers, but there has to be a different segment for seniors. These are not seniors today who were born after the internet. And just like with millennials, there's a separation between millennials that came with the internet, after the internet, before the internet. Again, I'm a millennial, my sister's a millennial, completely different behaviors. We need to talk about seniors today versus seniors in 15 years from now, in 20 years from now. Those that probably will be savvier enough not to fall for something that isn't genuinely good, right? And we see that. So seniors, also where there are seniors, sometimes there are more scams, and that's not being brought up or discussed.
Yeah. And so someone came up with the term on Twitter. They should change the name of the company from Select Quote to Senior Quote.
Shefi found out that apparently that name is already taken, so too bad for them. But in my opinion, and this is just my opinion, because there are a lot of scams. To me, if you reach a certain age, I believe the important insurance decisions that an individual is making, especially around final expense, should be up to the kids. Because at the end of the day, it's going to fall on the kids anyway to take care of, the funeral arrangements and things like that. So when we kind of broke the Prudential Assurance IQ story, the things that some agents were doing, just not right. And I feel like the kids, the children should be in the conversation, making sure that the parents are getting the right thing. I think it should be regulated. Of course, it's not. But again, they found a shortcut. And when Ethos, Ladder, Bestow, they're all trying the hard thing of actually getting people to buy online and feel comfortable in the decision. And of course, the expensive marketing costs. This company comes in and just is very aggressive, targeting a very naive audience. There's no other way to say it. I mean, if you still have a landline and you talk on the phone, then I wouldn't call you a modern consumer. But they've done it. At the end of the day, money talks in this industry, and I'm sure a lot of their carrier partners are happy. I know a lot of them are in the health space. But that's what they did. So nothing new under the sun. It doesn't mean anything for the industry. It just means that the old players and the old enablers are still in business, are still doing good, while the new innovators are trying to figure out how are we going to succeed, because you better believe.
Because one has a more challenging demographics to target.
Of course.
That's what it boils down to. The average millennial knows their way around the internet, doesn't mind shopping around, cares about price, yada, yada, yada. There's just so many differences. But, one is going to be long lasting, and one is going to face a really big question mark again down the road. The soon to be seniors or not so soon to be seniors, where are they going to go to? But for now, it's congratulations.
So Select Quote probably targets in a particular way where it's, cheap Medicare supplemental insurance. So
and on specific sites, Publishers Clearinghouse, just like Assurance IQ, people with a lot of time on their hand going to gamble and win that big check. That's what it is.
And then there's a whole marketing behind it. So as soon as you put your phone number in, it's a lot of direct contact to keep moving. So Shefi, to your point, that's an very old school, method. It's lead gen with lots of follow up. I was buying life insurance. I made the mistake of giving my phone number, and all of a sudden I was getting text messages and phone calls every 5 minutes for weeks and weeks and weeks and weeks. I could not block enough numbers. So that's likely to keep going into the future, right? Like just the overwhelming, we have so many different ports that we can connect to. It's likely these lead generation companies are going to use all of them, and insurance is a tough sell. So they'll create a funnel, fill the funnel in with those that have put in their numbers, and then hammer away.
But if you think about it, it's a very beautiful business model, because when you target seniors, even if you really treat them poorly, they don't know to go online and write bad reviews. Maybe they'll go to the Better Business Bureau, which is great, because when you make bad things with millennials, the internet will know about it.
Yes.
With seniors, they don't know what to do. They don't do anything. So people go in and there's not as many bad reviews on Assurance IQ compared to EverQuote. Yeah. And EverQuote is an angel compared to Assurance IQ.
I'm trying to find, do we have a stock symbol?
A stock symbol?
Yeah, they went public. Do they?
Oh.
I'm just trying to get what their. I'll look it up while you guys are talking, but I'm just trying to see what their market cap is.
Oh,
so
yeah.
What was it worth? What was it worth to them?
It went up 40%, and I saw comparisons to EverQuote, and they said, well, Select Quote makes more money. They look to be in a better position. So I think
Nice,
investors are happy.
nice website. You know, um, I mean, not scary. Doesn't
No, not scary.
doesn't look. So I'll keep looking that up while
I
we
think if
talk.
you want scary, you should just visit Glassdoor and read the reviews.
Okay.
And I think
I'm not surprised. I just went through it. It's annoying, and Avi, what you're telling me means that this particular model probably has a shelf life. Once you get a little bit more savvy digital consumer coming through the funnel, they're not going to put up with this.
Well, again, the question is to target seniors and do very well there. That's a big market. That is a big market. And as a matter of fact, Prudential now calls Assurance IQ a seasonal business, and they're all about the Medicare and the health insurance. So it's a big market. You could make a lot of money there. And they're smart not to target millennials because they know the acquisition costs are just too high and they won't see as much of a success. But they're successful, they're making money, which you can't say a lot about other insurtech companies trying to do it the right way. So it's the ultimate question. What do you do? Maybe you should start off in a bad way, do this, and then go into insurtech and maybe acquire a millennial facing brand. Maybe that's what you do.
Yeah.
But it's a big question because, at the end of the day, you have carriers enabling this and saying, we need the sales. We need someone helping us sell more products.
Yeah, so the news story is they raised $570 million in the IPO. It did. It is up around 40% from its opening. So probably, I mean, that's the amount that they raised. Their $60 million profit on $263 million in revenue. I know they raised 570. Market cap $3.25 billion.
That's, I believe, is that more than Assurance IQ or the same level? The same level.
I think it was around the same level. So,
yeah, well.
Wow. Okay. Well, there's a story here I think that we're going to continue in future versions of This Week in Coverager. Why don't we transition to story number 2? What was another important topic that sort of popped up this week in Coverager?
Yeah, story number 2 definitely was Haven Life, their announcement of a new product, no exam, 100% online, a set of APIs. It got a lot of clicks. I don't know if it's because of the Haven Life name or the MassMutual name, but it's always interesting. And I saw someone posting on LinkedIn in regards to the story. This is something we did at New York Life in 2012, or we're about to do in 2012, but it was shut down. Yeah. So, they saw the future. Yeah, 8 years ago.
Great 8 years ago.
And I think it's nice. I still think, if I'm not mistaken, the no medical exam, it has a limit to how much you can get. You cannot get 5 million in coverage with no medical exam. So it's a very limited product. And I say you need to have it. Yes, you should have these capabilities if someone wants to partner with you. But you look at you look at SoFi and Ladder, for example. If the application could have been done via SoFi without having to go to Ladder, I think consumers that work with SoFi, that have an account with SoFi, they would say, you know what? I trust SoFi. I trust their selections of partners. I don't need to research any other insurance company. Let me get this done.
Mm-hmm.
MassMutual, Haven Life is not partnering with SoFi. That's taken by Ladder. And still, I don't believe, Shefi, if I'm not wrong, Ladder doesn't use an API with SoFi. I think you go out of yeah. So to me, the question is, why not? Like, if SoFi is truly a digital company, and they are, why not allow that digital experience? And I believe it's the same with Lemonade. Lemonade has an API, but you still go out to lemonade.com to do the process.
Unless you're Rhino, we know of one. So some use their API.
Yeah.
Probably
So
not.
yeah. So to me, you need to find a very specific partner that has a very good name. Like for example, I don't know, maybe thinking about Monzo, for example, when they come to the U.S. and they say, Haven Life is our partner. That's it. You can do your research, but you can get it online 100%, and that would be a good use case. And some customers would be comfortable, trusting the Monzo brand that Haven Life is a good brand. Let's do it. But I don't see it going mainstream. I don't believe that just because they have an API now, everybody's going to say, oh, yeah, let's offer Haven Life and they'll win the distribution game.
Yeah.
I don't think that's going to happen.
I think the elephant is in the room is how MassMutual is somewhat managing this channel conflict with Haven Life, where they work with agents, work with Haven Life, and probably issues arise, but they go through it, and Haven Life is doing its own thing and growing and improving, and MassMutual is of course okay, right? They do their own thing. There's a nice synergy over there. I mean, we like to laugh at it that it's not really a startup. It's kind of backed by Mama Mutual, as I like to say, but it's working.
Was Haven built within MassMutual always? Was it initiated in MassMutual? Did MassMutual buy them?
No, I believe it was initiated within MassMutual.
Okay.
But
So this happens in property casualty all the time. There's these channel conflicts are real. This is not, well, we'll put up a firewall. We'll change the name of the company. Like sooner or later, you do get that channel conflict where, you insult your current distribution and they just decide it's not worth it. The company we're selling for is competing against us. We're just going to go somewhere else. So that I foresee that to be a serious problem. I'm not sure that's easily handled.
no, but I have to say that you have to find a way to just do it. And what I mean is, yes, there is a channel conflict, but honestly, there is no other way. I remember working at CNA. This is a topic that used to come up a lot. What are the options? Some people aren't seeking an agent. So if you take into consideration all these factors, all the different user demographics, the fact that InsurTech is about selling insurance in 1,000 different ways, I constantly say that it's about segmenting and reaching an audience, then you kind of, it's not clear-cut borders, but they're probably not overlapping as people thought they were, back in the days.
Yeah. Then the issue of the medical exam, I am still confused. Anyone that's listening to this that's on the life side, I'm getting conflicting information. Does the medical exam actually make a difference? Like,
I went through the medical exam. Yeah,
I'm hearing it just really doesn't make that much of a difference. So that it's a legacy of the past, and so if it's not providing any value, why are we still going through it? Because it is a pain in the butt. And now, Avi, you said that there would be less capacity, less limit that someone could buy if they don't take the medical exam. And I'm just wondering, is it truly a relic of the past, or does it actually provide value?
So when I went through 2 medical exams, one with AIG and one with Northwestern Mutual, they came to my apartment with that portable scale, and they took blood, and I had to give all the other samples. I asked
TMI.
yeah, and I asked the person doing the exam, okay, like what's this about? So apparently, if you lie in your application that you, for example, have a disease and you didn't disclose it, and they signed you up, and you're covered. If that comes to life, the life insurance company still has to pay, even though you lied. That's from what I understood from them. So they want to check the most accurate, lab results. And in my case, it actually increased my rate because they discovered I have high cholesterol, so I'm paying more. So for me, it wasn't good. But yeah, that is, I think, the reason. I believe there's a way around it if you go to your primary care doctor and you do the latest lab results. But there's still the process of someone going through these paperwork, like all your medical records. And I think that's one of the services these companies provide to life insurers. So it's not just about making sure everything is accurate. It's also going through all the information, then presenting it to the underwriter and saying, okay, we went over 100 pages of his medical records. He has high cholesterol. That's what we found. So I think there's a service there. But, we saw, I believe, who was it? Erie Insurance that said, okay, no more medical exam. But it was also up to a certain amount.
Yeah.
It was up to a certain amount because you don't feel comfortable giving someone $5 million. Yeah.
That's convenience. They have a customer and then they could upsell or, check up with him but they've got a customer because we've said that this many times, like InsurTech was born out of the need to offer a more convenient product.
That's what I think as well. And, the medical exam is one of the biggest sticking points, and I use sticking in two ways. One is that it adds friction to the entire process, so it delays it. And as our good friend Pat West says, he's been through a lot of situations where he can't sell the life insurance policy, or he hadn't been able to. I'm not sure if he's doing that now. Because the person that wants the life insurance is afraid of needles.
I can tell you that friction point. You mentioned that it goes in so many other areas as well. And I'll take the Assurance IQ example. One of the reasons they were so successful is the fact that they chose a product that could have been, underwriting over the phone. Like no need to have a person come in and sign the documents, or no need even for sending an email and having the customer fill out the details. When you can do everything over the phone, conversion rates go up. Of course, there's also risks associated with that, but the more you ask of the customer, you'll see the conversion rates go down. That's typically how it goes, especially with a product like life insurance that no one is very excited to get.
Yes. No, it's and it's true. And I'm not sure how it works when you want to do comparative shopping, but if let's say you wanted quotes from 2 or 3 different companies, do you have to actually buy one and then take a medical exam, or do you have to have three medical exams?
You have to have, I had 2 medical exams. So the second you ask for a quote, you talk to a financial advisor. He sets up the appointment for the medical exam. After the medical exam, they give you a quote. Now, in Ladder's case, for example, they give you a coverage for that period of time you can buy until you get the medical exam to see what your final rate would be. So that's nice for people that are like on edge. I need to buy something right now. But you have to go through it, which I always thought was weird. Like, why not just go for one medical exam? AIG could ask Northwestern Mutual, Principal like share the information.
They don't do that.
They work with some of them work with different labs, different companies. So I wonder what that's about. But I don't know. I feel like if you take that process away from life insurance, then you really have like no touch points whatsoever. At least you remember that, you had a medical exam. You remember you have high cholesterol. You remember that there's such a thing as a portable scale. I thought it was a nice experience, but that's me.
That's him.
Okay. So Haven has, so they have this particular product that's, with potentially no medical exam or with lower coverage and API. Any word on like connecting to Apple Watches or I always feel like they create these products and there's always like something important missing from it.
I think Haven Life, they were one of the first, if I'm not mistaken, to kind of go beyond insurance, and they offered like benefits, Haven Life Plus it's called, where you can get a free will to write your will, and they had a partnership. They may still have a partnership with Time Shifter, which is an app that helps people, eliminate jet lag when they fly. But I don't believe they do anything around smartwatches.
Yeah.
I don't believe they do. And it's an investment. It's a big investment. I think the space is very crowded. And I don't know, I feel like, Haven Life, a lot of it is, the direction of MassMutual. And they are very, they're not, you don't see them talking about disrupting the industry or eliminating agents, because they can't say that. But you don't see it yet. And it's going to be interesting because our next topic, when we talk about cyber insurance, I feel like how cyber insurance is done today, that's how insurance companies should have done other products in the past, to me.
So let's segue to
So,
that.
so Coalition raised $90 million this week, and their product, and I know you spoke to another person on the Coverager podcast that does something similar. They offer the platform to help people mitigate cyber risk, and they offer insurance. And I always said that, a life insurance company, my view, you want to keep people alive, right? That's your goal. You don't want people to die. So instead of Volvo creating the safest car, why not a life insurance company create the safest car out there to, when people are about to make an accident, you prevent that with all these sensors and things like that. That, to me, that was the vision. That was where you want to know. You don't just want to provide the coverage and sit back waiting for something to happen or waiting for other companies to kind of mitigate that risk. Apple Watch saves people's lives, like literally people going into falling, the phone calls emergency. It's just amazing. And I thought an insurance company should do that, in a perfect world, of course.
Yes. I mean, I'll tell you, as someone who sells insurance for a living, the selling part is unsatisfying. I said it there. Yes, I get a thrill that should there be a claim, I get to put people back, make them whole again. But the unsatisfying part is that I know a lot about what's going to happen, what could happen, how they could prevent those things from happening. And we have not, as an industry, connected the dots to do that. And in 10 years, if we're still selling insurance in the same way, I'm going to be pretty pissed off, frankly, about all of that. It's we have all of this information. Let's prevent or mitigate. I just don't see, like, they should be giving, life insurance companies should be giving the Apple Watches away. I don't know, or selling them at a discount and then building that information into the policy, because it saves lives, keeps the policyholder alive. And now both the insurance company and the policyholder, they have the same incentive. And that's a struggle in insurance, is to get the incentives to align.
I think that the ship has sailed for a lot of, I think in general for the insurance industry, at least for traditional products. If Volvo tomorrow wants, and they say to Progressive, look, we have in-vehicle cameras, we can know if the driver is distracted or if he's drunk, give us a good rate. Like, we have our technology that stands behind a potential claim. They have real leverage. And Progressive would be very happy because, they mitigate risk. Everybody talks about how insurance is about claims. That's the product, the claims. And I think because of that, at least we always say at Coverager that insurance companies are going to go behind the scenes because they have no actual way. You don't see Geico. It's funny because when Tesla went into insurance, Warren Buffett said it would be as if Geico would start manufacturing cars. Not at all. It's more difficult to manufacture cars, and there are only, I believe, 16 car manufacturers in the US, and there are thousands and thousands of insurance companies. So it's clearly easier to be an insurance company than to be a car manufacturer, where you actually have to stand behind a product, and you can't go to court and say, well, we didn't mean that. Like, someone died in your vehicle, that's a big deal. they recall cars all the time to make sure everything is working. So much going into it. And automakers, travel companies, so many of them, they have the data, they own the experience. And if they want to make more money, they could just say to an insurance company, look, or maybe some, hey, let's work together. Let's do something to help prevent the risk. And the problem is now that it's up to the automakers to choose some companies, and the ones that will be chosen are probably the brand names, the ones that can give the highest commission, the ones that have the better claims experience, because you do want to eventually offer a good service to your customers. So to me, the ship has sailed. But what we're seeing in cyber, I think it's good signs. A company like Coalition doing everything, trying to provide like a comprehensive experience as much as we can, because a lot of the cyber risks are unknown. You don't know what's going to happen, and a lot of it you cannot prevent, of course. But it's a good sign, and if they do this right, then they have a good future, in my opinion.
Yeah, and Shefi, I don't see for cyber. It was always a head scratcher to try to figure out when some of the larger carriers were offering coverage. They have expertise in house, but it was not comprehensive the way Avi described it. So you have Contour, you have Cowbell Cyber, who we just interviewed, and their uniqueness that they're bringing into the table is proprietary algorithms, unintrusiveness in the product and how it works. And I know there's more of an enriching process because they are the gatekeeper as well. So they're trying. It's really difficult to prevent. So there's an element of prevention. There's an element of mitigation. Should someone get in, behind the gates, they will attempt to mitigate it. And I think the massive advantage is that you get to real-time pricing on this. You get to be able to read things on a second-by-second basis to try to understand it. And I think there's that, and the unobtrusiveness means that I think it's a better experience for the customer overall. But if you know what's going on second by second, you can offer more coverage. You know how to do it.
There's also a piece where they're selling through agents. All the cyber risk insurtechs that I'm aware of, I think it's 100% across the board. They're selling through agents. This isn't a product that you're picking online, with the exception maybe of Slice, where they have on-demand cyber insurance and you can buy that through integration. So they've basically allowed agents to have a more intelligent conversation about what it is that they're offering. I think Coalition mentioned they have 25,000 customers. When they announced the funding. I thought it was also interesting when they said that they didn't want to reach a unicorn valuation, so they're kind of a tad bit below that because they don't want to seem pretentious. Good for them. I think for the most part, there's always a legacy insurer behind that. With Coalition, it's Swiss Re and Argo. So even though there's a lot of data out there, connecting the data and getting to that real time, I have to see it to believe it, what that actually means, because, risk prevention tools were out there, but they've packaged it. And I kind of always say that, like, if you can package things the right way, you don't necessarily need to reinvent the wheel, which is why I'm against peer-to-peer or things that go a lot deeper in a regulated industry. This is something where it's, coverage, risk mitigation, the right communication, the right marketing, and obviously execution is key, but before execution, you want to have a good product that's worth executing. And that's what we're seeing here with cyber insurance.
Yeah, and Avi, I think there's going to be huge demand. I think what we're learning from this pandemic is that anything that could potentially cause business interruption is now up for discussion. Needs to be considered, and I think there's going to be very little patience with boards of directors for companies that don't close those gaps. So we've now moved into this digital world where probably most every company, I won't say 100%, maybe there are some that still do things by mail, but they have exposure. They have to seal it. So there's going to be huge demand, and the way Shefi described it, being able to package all of that up seems very compelling, regardless of who's in the background.
Yeah, it's interesting. Cyber insurance. My brother-in-law, he is an attorney, and there was the big case. I don't know if you follow real football, which is soccer in America. But Cristiano Ronaldo, the whole case that was kind of leaked out to the press, where he was accused of, attacking a woman. So that information was accessed through his lawyer. He didn't have, someone hacked him basically, and that case was a very kind of like a defining moment for a lot of law firms to say, we need to have this. We don't understand it. We may not understand it, but we need to have it because we don't want to risk our sensitive clients' data out there, because the damage that it caused to his brand because of this was just incredible. So a lot of
it was the law firm that was hacked.
Yes, the law firm that was hacked, and that's what they say. At least that's how it got out, because probably Ronaldo would not, because it was settled already. It was settled out of court.
Yeah. Okay.
So those documents, and it really is like a fear factor. But this is a fear factor that you really don't know. And like when you go in a car, okay, you're a good driver. Of course, something bad could happen, but you feel you're somewhat in control. With cyber insurance, and of course, if you have, again, sensitive data, you'll do it. I doubt restaurant owners everybody is covered with cyber insurance, but a lot of it is education. So I think that's a big part of it. And Shefi, if I'm not mistaken, you mentioned that Ribbit Capital, that's one of the backers of Coalition.
Yes, which is interesting in itself because of the ecosystem that they have with small business players. So they invested in Next, I believe, also.
Vouch Insurance, and
But interesting is like Coalition is backed by Swiss Re, Next is backed by Munich Re, right? I mean, but you know what? This is something I always wonder. I mean, are they really competing at the end of the day? If it's good for, back to channel conflict, yes, they are. But if there are areas these companies can work together, I think that's what we're seeing. Just these pockets of ecosystems targeting small business or targeting the urban millennials, and it makes it easier when you think of alternative distribution and not going direct through Google or Facebook or if your audience isn't watching TV or listening to radio like Select Quote.
Yeah. And I think hopefully this is the right model to go out, because again, I know property casualty the best, so we'll transition over to property casualty for the same thing. California is having issues because of 2 prior years with massive wildfires. And so a lot of carriers are pulling out. It's really difficult to get just regular property coverage because of the fire element of it. And I just keep thinking, like, when is someone going to build like an external sprinkler system? Like, I know, like the Chubbs of the world, the AIGs, they have the private firefighters. That's a really nice touch. But if those private firefighters can't get to the house, it doesn't matter. You almost have to take it into your own hands. And we know, I can go to Bob Frady from Hazard Hub. He'll tell me which houses are more exposed than others. And some of them, there should be, hey, we will help you finance this really important thing to protect your home if you buy insurance from us. I don't know. Want to start a company? I'm kidding.
No, I don't. Not insurance.
I would move
hard.
to California.
It's really hard.
That's where it is. Yeah,
it is really hard. And so I think FM Global has the longest term model for executing on something like this, and I don't think they provide any specifics. Like, I don't think they do any of the risk mitigation, but they have had so many decades of fire experience that they would go into companies with their engineers and basically say, if you do these things, you will qualify to become a member of the family of FM Global. And companies would do it. They would invest tens of thousands of dollars, maybe hundreds of thousands of dollars, and the appropriate sprinkler system, the appropriate firewalls, to become part of the FM Global family because the incentives were correct. I just think we can take it one step further. And I think the cyber model really really embeds that into the insureds. It takes the product and it becomes really a part of the business model of the insured to prevent, mitigate, and transfer risk. So,
Yeah.
But overall, I feel like this has been a really good week. It wasn't so much COVID-led news.
Wait, there's one big news story, not in insurance, and I wonder what you guys think about it. So Facebook announced that I believe in 5 or 10 years, 50% of their workforce could be remote, but Mark Zuckerberg said that they will adjust the salary of people based on where they live. So technically, if you don't live in an expensive place like San Francisco, you're going to get less money. What do you think about that? Is that fair? Is that legal?
Fair is subjective. Legal, it probably is because he announced it.
I agree.
Why not? Yes, I think it's fine.
Let-
Especially since he's opening up opportunities for people that aren't living close to the job, which, by the way, if we have to move to Silicon Valley or New York City, we pay it in rent or we pay it to other companies, so, or other areas, right? I don't know. It sounds fair to me.
Yeah. This is probably not the right forum to discuss fairness or how fairness works, but last night I was on Twitter and noticed a bunch of articles about, hey, it seems like companies are benefiting from this work from home because they're going to have lower real estate costs. That should be transferred to the employees. And then I'm thinking, well, the employees also don't have to commute anymore. So there's that benefit. And so I think there's going to be a few cans of worms that are going to be opened up for this, but it kind of makes sense, Avi, right? Like if you're a software developer for Facebook and you work in the San Francisco Bay area, which might be one of the more expensive places in the world to live, and you decide, well, Facebook's going to allow me to work from home, I'm going to Arkansas. And, I expect to keep making my $250,000 salary. I don't know. But
regardless, issues of salary is still going to be, it currently is debatable, like where we're moving going forward, because nobody's know what are the impacts beyond the immediate impacts that we're seeing of this pandemic, right? So it could be that that certain salaries are bound to go down, just like valuations of certain companies are going down. We've seen that with Monzo this week.
So
but if there is employment, it's a good sign.
I saw a tweet to your point where someone was asking, okay, now that people are working from home, what is considered a business expense? So basically they were saying, what can we expect the company to pay for? A new couch, a new desk to work on, some coffee because they get food, catered lunch at these offices, and now they won't. So it was funny because some people, that's what they see and they demand. Because if I was a Google employee, I would want to go to the office because I get free food, I would want to do that. And now if I'm home, what am I going to do?
It's
For the record, Avi typically goes to our office, so he does.
I bet Google has the best hamburgers too, Avi.
Their food is, from what we read online, they say it's just incredible.
We actually have a whole report on it, on the subject of wellness.
Well, there's a movie on it. You know that, right?
There's a movie?
There's a movie.
Wait, with the two the comedians, right?
Yes.
Yeah. When they go to Google, to the campus.
Yeah, they go to the Google campus. I can't remember the name of the movie. I'll think of it on the after this. And they, Vince Vaughn. He goes to the cafeteria. And he's like, okay, I'll have a bagel, and it's like, the guy behind the counter is like, okay. He's like, how much is it? Oh, it's free. Really? He's like, well, what if I have a bagel and like this pear? It's like, it's free. And he ends up walking out with a whole bunch of food because he can't believe it. I'm sure it's going to be awesome. Shefi, to your point, it does seem like psychology has changed a little bit. For as much as I think there's a population of people who would love nothing better for a flare up of the pandemic to occur just so they can say, see, we told you this was going to happen. People are doing the right stuff. Things are opening and people are not being crazy. We will see flare ups, but I think it does seem like we're on the other side. Most of the statistics I follow show that we haven't been at this position in terms of new cases and hospitalizations since like late March. So we've peaked and we're on the other side now, and hopefully we keep doing the right thing.
We're hopeful.
Okay.
Yeah.
Well, this is the Memorial Day edition of This Week in Coverager. I was just, if you saw my head down, I was trying to get the music, but for some reason my YouTube app wouldn't open. So anyways, Shefi, Avi, thank you.
Thank you.
Thanks,
And
everybody.
happy Memorial Day to everybody.
Happy Memorial Day.
This
Bye.
is This Week in Coverager.